and get everything turned on. And I gotta go and invite everybody. So I will be streaming today in the Bullish Bears Futures Room. I donate my time on Friday so that we have someone in there streaming. Besides, I like to come in and do at least one day of futures streaming. Kind of just offer a little different perspective. So yeah, it's job day, as I named this stream. These numbers are going to be the catalyst that a lot of institutions are going to use to try to discern when we're going to get liftoff. And liftoff is the fancy term for when are they going to start raising interest rates. There's a big disagreement right now. Well, there always is disagreements. If you're kind of new to trading, maybe it's not a concept you've really dug down into yet. But when it comes to economics, there is no set standard. It's a nerd argument, where people can sit around and argue for days about what policy changes can create effects for whatever you want to do around the world. And by tweaking and adjusting the knobs of the economic tools that they have, they can try to slow down inflation. You've probably heard the words like stagnation and destagnation, and all these little cute terms that they have. Well, all of those come with arguments behind them. How do we monitor them? When do we make adjustments? What are those adjustments going to do? What kind of effects they are? And right now it is a conversation about when we're going to have liftoff. The sooner that they do that, the sooner they'll have tools that available should things start to go really bad, that they can use those tools to kind of readjust when situations are illiquid. Right now we don't have any tools left. During Corona, they used just about everything they had, and they really need to reset the system, raise interest rates so that later on, if they need to, they can cut interest rates. Today's job numbers is going to be a big deal about when they could start doing that, and the market does not like having the interest rates go up. So that we're seeing a little bit of that. We have been seeing it for the last week or two. So at this point, good news is considered bad news, because good news would kind of validate or give the Fed permission or confirm that the Fed should and could start perhaps raising rates sooner than what everybody thought they were going to do. This is one of those times where, maybe 9 months ago we were saying bad news was good and good news was good. But in the current situation, bad news is good and good news is bad, depending on, which side of that nerd argument you're on. Let's go in and take a look at the market watch today. We do have some economic events on the books: 8:30, 9:45, 10, and 1 o'clock. Now, again, that rig count, I wouldn't even look at that one. And that puts us down into 8:30, 9:45, and 10 o'clock. The important thing to realize is After 10 o'clock, that's it. There's nothing else on the books, except I did see that the president was going to be talking again today. I didn't catch what time he was going to be talking, but that's certainly something to consider as well. When is he going to be talking and what does he have to say? So definitely want to check in on that somewhere. Get a time frame so that you know when he's going to be chipping his teeth and maybe perhaps avoid getting caught in, a little bit of impulse spikes. By 10 a.m., it's going to be game on. So we've been in this little bit of a range. You can see the downward trend is intact. If we use the R regression line and we just, start on the left side anywhere, it knows where to go. Drag it across to the right side. There's a very clear, very easy to recognize direction there. The sine wave is complete. High to low, low to high, high to low, low to high. For today's trading, realize at the moment we are basically flat, looking for a push through the upside here. We would first need to get through the Globex pivot. Then we would deal with the Globex high. Then we would deal with yesterday's high. Beyond that, we're good to go up to Wednesday's high. There's an argument to be made for a little bit of trouble right through there, maybe a little bit of a struggle. And perhaps right in there. But those are minors. We would be looking for a soft rejection on those levels. Definitely looking for a solid rejection at 45.93. Other than that, if we have a good numbers that the market likes, we could see 46.50 very easily today. Even at this late point in the day, it's still on the books. You're looking at a 1.57%. The ADR right now is 1.29. We have a market maker move today of $18, so an additional 0.39%. And that is the way you say it. It is an additional 0.39%. Well, if we just round up and say 1.3 and 0.4, then we're looking at a 1.7% move that could be made today. Now, those are just looking at averages and then market maker move. We can just go in here and straight up ask, what's the expected move today? We're on the last day, we're 0 day. The market's going to close at 4. Between now and 4 o'clock, what's the expected move? $40.90 with a market maker move of 18. 18 and 40, it's a $58 expected move between now and 4 o'clock. Yeah, just like that. A break to the downside. We'll deal with pivot, a little bit of a pivot minor. Globex low. Yesterday's low. And should things get really rowdy, Wednesday's low. That would put us back down to 4,500. Now that $58 expected move that I was just talking about, that doesn't only apply to the upside. It also applies to the downside. That's a $58 expected move higher or a $58 expected move lower. A break down to 4,500 is a 1.8% move. That's an $81 expected move to the downside. Now, generally, If we're looking at a market and we say, oh, yeah, it's got an ATR of 1.3%. For the ES to have an ADR of 1.3 means in that 22 hours, it's been averaging a move of about a 1.25%, 1.25% a day for the last 20 days in a 22-hour trading cycle. Guys, we've already lost half of the day. I was sleeping through it, right? So the market opens at 6 at night. Here it is, 7:30 the next day. We're 13 hours into the trading day. If we're going to make a 1.25% move, it's going to be a rocket ship. We won't slow grind at this point. We're basically flat on the day. We haven't gone anywhere. So while we can make a 1.25% move at this point, it would be vicious. It would be violent. This is what a violent, vicious move looks like. This is how you make a 1.5% move in an afternoon trading session. So it won't be subtle. It won't sneak up on you. It won't just like, well, dang, I guess we really did move that far today. Everything will light up. I don't see either one of those, though, to be honest. I want to kind of just mark out this range right here and point out the fact that we're very likely to stay right there. That's box one. But you add to that the rest of the trading session from yesterday, and that's box two. You add in Tuesday to this, or Wednesday. Now you've got three levels of where we could move. You got your positive side up here. You've got your negative side within yesterday's range. Everything clearly defined without a lot of stress or fuss or anything like that, right? So if we stay inside of box A, that little area between 45.40 and 45.90, hey, that's not bad, right? That's a 50-point move in the ES. You kidding me? Plenty of room. Should we break to the downside, though, we'll be looking at box two. That's 4,500 to 4,600. It's a nice 100-point move. I think I can get behind that. And then an upside move, rather than keeping that box selected, we'll just bring it up here. Would get us up to 650. 75 points from our current location. It won't be subtle. You'll see it coming. On to the Nasdaq. Kind of do the same thing. You got your first box. A breakthrough Globex means we'll be dealing with yesterday's high. I don't see any reason that we couldn't resolve that. Beyond that, we really don't have too much to struggle with, right? We just take that line and bring it across, and you can see that's really the one. We make it through that. We'll travel through this area with relative ease. Now, I'll mark the area, but we're not going to go there. 16,400. We're not going there. We got an ADR of 1.67%. We're flat on the morning. We haven't done anything yet. We're basically where we were when we got off work yesterday. So a break to the upside and getting through the 50 means that we can start moving towards the 200. That's kind of where I would be ballparking. What's the expected move on the Nasdaq for today? And keep in mind, there is a market maker move. The expected move is $165 up or $165 down. Add another 80 to that. That's $240 higher or $240 lower than our current location. You feel me now? And we can make that move. We can. But it would be extreme. Remember what extreme looks like? So it won't be a slow grind. It won't be subtle. We don't have enough time left in the day for it to be subtle. If we're going to make an exaggerated move like this and match our average daily range, we're going to light up like a Christmas tree. And it'll happen when the economic news comes out. So by 10 a.m., you will have the economic news of the day. And it's very likely that the direction that we set past 10 a.m., that bias sticks until the end of the day, with the little asterisks that I'll add whenever the heck the president is talking. If the market does not like the news that comes out today, then we will challenge the low. We will deal with yesterday's low. And beyond that, things will really start to get ugly. There's a $240 expected move. Put us around 15.8. It's an easy number to remember. 15.8 to the downside, 16.2 to the upside. It's not too bad, right? Okay. The VIX and the dollar do not look the same. We're fine. We're not correlated there. The VIX and the bonds do have these equal tips. The VIX is responding to the bonds. The market is responding to the bonds, not the dollar. Remember, a lot in the last 10 days, we've been looking at the dollar frequently. When the bonds started to fade off, set your mouse at the lows of the ES. There's our rally up as the bonds fell. There's our fade as the bonds rallied. Here's our rally as the bonds faded. Yeah, just like that. Synchronize your mouse so that you can see it in the bonds and on stocks at the same time, and you can kind of try to get a feel for who's rocking the boat. We had that significant sell-off in the bonds yesterday. Kind of gave us that little bit of a lift off. We did have that move in the dollar. Did you feel that? Keep your eye on these three products through the day today. They're going to really greatly assist you. Tick, trend, AD, market breadth, bonds, VIX, dollar. These are powerful tools that can help you determine, are we really going to break through that resistance or should I sell here? They are going to help you determine, is that trend line going to hold or are we going to break through that? These tools can help you answer that question and make an informed decision to trade. Act accordingly. So these are the sectors. You can see how at least half of them are compressed, sitting in a little bit of a squeeze. A lot of them are without any trend. And a lot of negativity in the cam. Downtrend, pull back. Downtrend, pull back. All right, set it to the S&P 500. Come into change percent. Kind of turn it into a box. Use the filter. Reduce the names down to around 100, which has been kind of tricky lately. Adjust the color scheme to respond a little better. Other than individual areas like commercial services and health services, things are looking pretty good out there. Looking at the watch list of the S&P 100, extended hours, less than 20 names are negative, and out of these, if it's less than 25%, I really don't consider it. Same thing on the other side. If it's positive but less than 25%, I really don't consider it. Neither side really has much beyond that 25%. There's a whole lot sitting in the middle that just isn't much of nothing. Everybody's waiting on this economic report this morning. Set this one to the Nasdaq 100. Change pre-market. Change the colors. Remember that the Nasdaq 100 does not have financials in it. Adjust the watch list. Extended hours. A lot of these names are just not even above a quarter or below a quarter on either side. To be able to quantify and ask that question with a little bit more conviction, how many names are up at least 0.5% this morning? In the Nasdaq, 5 names. In the S&P, 5 names. Only 5 names. The other day we had 60 names, for a little bit of a perspective. So that's it, guys. Watch the rally. Be ready for the economic news when it comes out. It will be the catalyst of the day. And it's very likely that we just get a dud and nothing happens whatsoever. And we just stay tightly correlated for the rest of the day within this range. That's very likely to happen. It doesn't owe us a break and a run. It doesn't owe us anything. Okay? That's it. Have a good one, everybody. And I will see you all next week.